Good day, traders. It is Wednesday, and we're going to look for some divergence setups. And here we go. This is the NASDAQ we're starting with, 5-minute chart. We're always looking at 5-minute charts. I just find it good to find divergence. You can find it on any time frame, though. So our first trade of the day is, see these 3 wicks? That tells you a major story right there. Okay, from here to the top wick. Oh, I could put it to this one. Yeah, it's more so the middle one. There we go. And we got a lower high there. So in a scenario where the price drops so quick, so fast, I always like to get in basically just under the low of the previous candle. So if we would have got in right here, our stop would have been 27 points, and it went down 34. So you definitely got your 1-to-1 win-loss ratio. That's all I really look for most of the time is 1-to-1, not 2-to-1 or 3-to-1. You're trading the wrong time frame if you're looking for 3-to-1. Most of the time the market chops up and down in a range. 80% of the time it does, and 20% of the time it trends. So this is why if you're trading a small time frame, you can't expect to hold on for dear life and get 3-to-1 win-loss ratio. Okay, you got to go for 1-to-1, maybe 1.5 at the most. Not that I'm a financial advisor, because I'm not. I'm just saying what I go for when I do a trade. Okay. So anyway, that's it for that trade. And down here, there's no trade to buy it back up. And let's look at the Dow. See the Dow? See what happens when you go, oh, I think it's going to keep going down. No, I got in. Look what it did. Went against me. 58 points. But I held on something. Actually, I had to go to the little boys' room, and when I came back, the price was right here. I'm lucky it didn't go right back up again, like it has done here. So anyway, I said, well, I got to get the hell out of here, and it came back down, and I was lucky. I got out. Because see what happens when you go, oh yeah, I think. Not I see, but I think it's going to go down. Think, yeah. Did it? Did it go like way down here like I was hoping? No. See what happens when you assume to think it's going to go up or down? This is what happens to me usually. I either get out by the skin of my teeth or I have a losing trade. But anyway, there's no divergence up here to sell it, to come down. The only thing that you had was the 5 crossing down below the 7, and you had the continuing action right here. See, it went down about 98 points from the entry point where you would have got in. You would have got in on the opening of this candle. So anyway, however, there is divergence down here, but is it the best? I don't know. But there is divergence. So where would have you got in? You would have had to jump in somewhere in here. And look at what it brought you into. A sideways, probably algo, you know, the supercomputers or whatever, these automated trading bots that are like next door to the exchange in Chicago. Yeah. For lightning fast super execution. Okay. So they can trade this. They're like buying at the bottom of the wick and then they're selling at the top of the wick. Buying at the bottom of the wick selling at the top of the wick. You know, at the top of the, not just the wicks, but at the top. Selling here where the blue line is and buying down here. See how they took it down here? Now they're taking it back up because they made all the money right here on the downside. Now they're going to make it going back up. And probably it'll continue to keep going. But that's what causes and creates these little sidewinders, I call them. Hold on. I'm having problems talking again. Shapes. See that? That's an algo box, man. That's what I call them. Supercomputer box. Yeah. Okay, we looked enough at that crap. Anyway, that's your divergence. Let me put in a little doodah here. There. Okay, let's look at S&P now. Yeah, there was divergence. Did I cover this here? Oh yeah. We did that trade. Let's look at S&P. Same thing as the NASDAQ, okay? You can draw it from here, a high and a higher high. See, we have a high, retracement, higher high, and whammo, down it goes. Oh. Excuse me, I thought I had a bleeding nose. It's not bleeding. Okay. And we draw it on here, right here. There she be. That's the divergence to sell. And yeah, that's about it. We could draw it from here to here. I guess you could have got, the trade would be to get in right there. If it's going to keep going up. You know, like this right here. Hard to see divergence right here. Just like that. Would you want to buy up here after it just rallied up 11 points? It just looks more scary on the S&P. Okay, let's look at some oil now. Woo, look at oil. Okay, there's definitely a hidden divergence trade here. Let me show you. Right here to right here. See, any dip along the way, you can draw this to. As long as the dip is lower than here where you're drawing it from. Okay? So right there, we would take it from right here, right up here. Okay? It's definitely divergent, ladies and gentlemen. So you would have got in right on the opening of this candle. Your stop would have been about 35, 36 points. And how much did we go up? 3-to-1 win-loss ratio, right to the top. Went up 100 points. If this would have made a higher high, right back up here, that would have been a double top to sell it down. But it didn't. Okay. Let's take a look at the pound yen now. Oh yeah. Pound yen has a trade right here and here. Let me show you. See, there's a dip along the way, a little dipsy-do. And up we went. Okay, and right here to right there. See what I bought right in here? And up it went. It was definitely a winner. 15 points, went up 40. Here's another one. Just like that. And you would have got in here, somewhere above these wicks, you would have got in. And it went up 20 points. And your stop would have been around 20 points. Okay, that's the pound yen. Okay, we're just gonna take a look at the euro yen now. Okay, got the euro yen. And let's just show them all. This is hard to see divergence right here. And it was a successful trade. Would have sold it right here. Stop would have been right there, 14 points. This is the euro yen. Went down 28 points. That's 2-to-1 win-loss ratio. And then there was another trade at the bottom here at this corner. And you would have bought right in there. And stop here would have been about 15 points, and it went up 20 points. So you got your 1-to-1 there. Okay. And then there's another one right here. So this dip right here. And right there to right there. And you would have bought somewhere in here, somewhere in there, yeah, right here. 15-point stop, and it went up 18 points. So you would have got your 1-to-1 there also. This is kind of difficult to draw in, like, but no one says there's a law that you can't draw it to any place you want to. Like right here to, I think it's like right there. Yeah, right there. Okay, sorry. Okay. Yes, right here. Okay. There's the divergence right there, and right there. La-dee-da. And, yeah, you would have got in there. So you would have got in here, right near the top. And it went up another 17, 18 pips. A lot of trades there on the euro yen, huh? Definitely. And gold. Let's look at gold. We have high and higher highs. They're kind of like roundabouts too, like a roller coaster. Woo, woo. It's like that. And that like that. And down we go. We would have sold it here, right here. And your stop would have been around 30 pips, points. And you got your 30 right there, 1-to-1. Is that all? Oh, no, there's another one. There's another one. Just like the other one. Right there. And from right there to right there. Look at that. Beautiful. Like a Harvey's hamburger. There's too much salt in them, but they sure are good. Cooked on the flame grill. I don't know if anybody here likes Burger King or not, but have you noticed it does not have the flame grilled taste anymore. Burger King, because they changed their process. Yeah, they put their patties through a little conveyor oven like as if like a pizza place. And that flame taste, it's gone. It's no more. I won't eat at Burger King no more. Okay, so anyway, 30-point stop and went down 88. Look at that, eh? Look at them smokers. And it's doing it again. This is again. Look, right now, right here, right now as we speak. Okay, Jason. Oh, wow. Pick it up, man. Pick up the tool. Okay. Yeah, something like that. And right there like that. And look at that. As we speak right now. What does this mean? It means to jump in. But I ain't telling you to jump in. This is a setup right here, right now. It's like Van Halen. Right here, right now. Yeah. Gotta love that. Anyway, that's all the setups. Oh no, hold on. Hold on. We still have the pound dollar. Is there a trade? There's got to be a trade. Yeah, it's right here. It's actually a trade right here. Let me see. Watch. Right here, all the way up the climb. Right there to right there. Okay. So you would have got in right here. This would have been the spot. So say you sold it right there. Stop is like 11 points. And it went down 10. Okay. And what about up here? Oh yeah, there's no trade up here. Oh, there's this one. Excuse me. Sometimes it's just hard to to find them all. You know, I wanted to say that. Well, first, anyway, here's the trade. Stop would have been 15 points, and it went up 21. You would have got your 1-to-1. There was no divergence to sell it down here. Anyway, to become, where you've mastered divergence, and I definitely have mastered it. It's been, like I said, since 2011, since I started understanding it and trading it. I know for a fact, yeah, there's lots of places on the internet, people talk about divergence. Most of them don't explain it right, how to find it in advance, but we're not even going to touch on that part of it. What I do want to say is that a lot of people will not trade divergence because it's just too hard for them to find the setups, to find the divergence in the first place. Whether it's regular divergence, or if it's the hidden divergence is the worst one to find. A lot of people just, like I myself in 2007, I was told from a good trader friend of mine from Nassau, Bahamas. He said, once you learn how to find and see divergence and get in on the trade, as it happens, he said, that's it. You'll make a lot of money. Right? And he himself, it's like 11 years later, till this day, he has trouble finding it. I don't have trouble finding it because I've been looking at these charts every day for the last 11, 12 years looking for divergence. Before that, I was trying to trade this arrow up, this arrow down, and all these arrow things, they don't work. Anyway, so I hope you guys stay for the long haul and you learn how to spot these divergence setups and you make a lot of money and you become a successful trader. Anyway, that's why I'm here, to share all my knowledge about divergence. Okay? So anyway, I guess that's it for the video today. We already looked at, didn't we? Oh, that's the pip snagger, yeah. Pretty rough in the pip snagger. There was a sell here. Another sell here. There was no buy trade up here because I didn't have the right criteria here. But I had it here and here. Yeah, actually, right here, right now is the right criteria right here, too, to sell. But anyway, that's it for today. If you want to find out more about divergence, please look and read in the description below the video. Thanks for watching. Thanks for listening. My name, once again, is Jason Sweezy, the Divergence Trader. Good luck and good trading.